Hi and welcome to the Market Alert for Thursday the 6th of August 2020. So yesterday we see that gold, Nasdaq saw S&P just shy of all-time high in mad dollar destruction dash, which we'll look at in the Market Alerts. And as I said before, this is this was following this news item. Calm before the storm. Gunlack points out Treasury volatility at record lows after being at 10-year highs just weeks ago. The MOVE index, a bit like the implied volatility, again, which we'll look at here, where it's indicating that this market is setting itself up for a major volatility move, i.e. the stock indices. So let's have a look through yesterday's trades first, and we started off with the market being sideways. We had a buy signal. The market moved higher, and you can see they're trading up to the BRN before it met some resistance, and I was taken out at break even on this trade. And then the market put in a potential buy signal, coming back to the 20 bar moving average, and the market then put in a potential buy. The sell disappeared, as you'll see in just a moment. There was still a lot of weakness around, and I was expecting the market to move lower, but we ended up moving to the upside, and that's exactly where prices went, and then they continued all the way through. I'm going to fast forward now. Once they broke the resistance, if you watch the R1, which I spoke about in yesterday's Market Alert, you will see prices trade all the way up to the R1 level before running out of steam, and the potential weakness coming in at this level as well. And then prices reversed off this. We had a potential sell signal that wasn't filled, which we'll see here, as prices then started to trade sideways, banging its head against the R1. And eventually, which is a shame that we weren't filled on this signal, prices came back, and the next one was quite narrow, not quite meeting the criteria, which is, like I say, it's a shame. But we did have the R1 resistance here and the high to actually move in on this trade for a move to the downside, and you can see their price is trading all the way back to the DP and the 200 MA there. Prices then rebounding off this, and then that was the morning session completed. I'll just come back to there. So that's the morning session completed there. With just the two long trades, and then say you've got this resistance at the R1, BRN, and then the MDI turning it to red there. So then I'm looking at the ADP numbers at lunchtime. They came out way below what was forecast, as you'll see here. ADP, get my teeth in this morning. Employment, huge miss, just 167,000 jobs created, below the 1.2 million expected. I mean, wow, that's a lot. There was another news item with regard to this, Trump saying that the payroll numbers are going to be great on Friday, but then wouldn't expect any more from Trump, would you? Let's face it. So that's the figures that were released at lunchtime, the precursor to the non-farm on Friday. The market moving lower. It traded down to the DP level, which you can see there. And this is before the market open. And once again, you can see them buying back in at this level as well. Just confirmation that all of these levels are very important on the chart. And this obviously is a signal before the market opened, which I didn't trade. I'm waiting for the 2:30 open. And now you can see also the market going down to the DP level and testing this area as well as the 200. And I think that was in the Dow, actually. Let me just wind that back. Yeah, that was in... Oh, that's in the 5 minute. That's right. It's the 5 minute German DAX. I'm just wondering why the 200 MA disappeared, but the DP was still on the chart. So you've got the market coming back to the DP level there, and finding a bit of support there. Again, you can see the green bars. I'm having a look now before the market opens to see where we are in the bigger picture. I like to be teed up beforehand, see what's going on, and compress the chart there just to see what we've got potentially back to the upside and to the downside should the market, whichever direction it chooses. So anyway, we kick off. We've got a bit of news at whatever it is, 2:45, and the market starts to move higher. And there's a subtle thing going on in these two bars here. You can see the volume is exactly the same, and the market coming off the DP, having not moved lower, even though the volume was the same, reversing, moving above the 20-bar moving average, and then moving to the upside for the news. The news was released, as you'll see in just a moment. Teed up, and also there's resistance there. So the market's moved up during the release of the news, which was a pain. And you'll then see the figures were released, they were positive, and the market then went up to the 200-bar moving average, and prices then began to trade sideways once more. You can see how the 200 there holding the market, prices moving down. And then we've got the crude oil inventories, and of course, just as before the news is released, the market gives us a sell signal, which is fine, because once that bar is over now, the news has been released. It's the bar after the vertical lines. Then we had the short, and there was a trade down to the DP level, to the BRN level. And again, you see this spike in the volume here with prices coming off the lows as the market is then brought back. And that was the afternoon session. It just became really quiet, and prices remained in a bit of a sideways move. So we had the two moves to the upside, but the first one couldn't do a lot about. But the second one was, a few points, 20 points, I think, was maximum on that. But the market just a bit quiet there. Like I said, that isn't going to last for much longer, as we see the dollar index continuing to move lower. And once this low is taken out here, it'll be a lot easier to put this into the software. I want to keep an eye on this, because as a buyer of the precious metals and a long time buyer of precious metals, if the dollar continues its decline, then precious metals are only going to go up. And now the crowds are really starting to get behind the metals markets as well. It won't be long before we see silver at $50 an ounce, back to the all-time highs, which will be great. Then, as everybody starts to leave the stock market and move into the precious metals, and the dollar, the last surviving currency at the moment, that is the only one where there has been a flight to, I wouldn't call it quality, but it's the one that's losing its value the slowest, whereas globally everything against the US dollar has been devalued. This is the signs of the end of the fiat currency system, and oh boy, is it going to be wild as the dollar continues to move lower and the flight to precious metals continues at a great rate of knots. So yeah, it's going to be really exciting market-wise over the next few months. I'll take your attention off the potential second wave of the virus as well. So lots of volatility in the pipeline, which I know is coming, because when we get the implied volatility dropping down like we're seeing now, it doesn't take long before we get the kick to the upside, whether it's been these small spikes prior to the COVID. Once we get into the lows, you get a spike in the volatility, and this obviously was just a big one with the COVID, and I expect this one to go back up to at least 50% of these levels as well, which will be great, as I say, for those of us that are trading. So overnight, we can see that the DAX has traded above the DP level. It's come back below the DP level and the 200 MA, and is currently showing some weakness there as well. So as ever, I like to compress the chart, see where I am in the bigger picture of, or see where the bigger picture is. I've got the DP above, I've got the 200 bar, I've got the close. So any sell signal there, I'm backed by these resistance levels. Targets to the downside, I can see the support at the low, and we've spoken about the low most mornings in the market alert. They won't want the market below the previous day's low if they can help it. So any short down to the low is an area where if you see any sort of green bars in red, then you know that the pros are taking profits. And then we've got the S1, and then conversely on the opposite side, it's going to take a lot to drive through the DP level as well, and also the 200 bar moving average. So in the daily chart for the German DAX, we can see that yesterday's high is lower than the previous days, and at the moment we're there also as well. So what I would be inclined to do here to get a measure of the bigger picture is this. I'm just going to switch to the fib retracement tool, this low to Monday's high, and draw these levels in here just in case we get a move to the downside. Then I will be looking for a break below the 5 bar moving average and then down to the 62 as the first target price. If not, then on the upside we've got the opportunity to take out the 62, the 20 bar moving average, and then of course the 78 as well. So I know where I am. I hold these figures in memory, know where they are, can see where they are simply by compressing the chart, and get a bigger picture of where the market is likely to trade. Get a roadmap is basically what it is. It's the market's own sat nav. When you actually compress the chart, you can see what is going on there. Okay, I think that is it. I think there's any other news items. Just apart from today's news, of course, that would be useful. We've got the Bank of England monetary policy report this morning at 7 a.m, which will be out in half an hour at the time of recording. And this is unusual. We don't normally get this at 7 a.m. We don't get the official rates and everything else until midday. So this is all being thrown out early. That's unusual. Interest rates to remain the same, wouldn't expect anything else except lower them. And then Bailey's speaking at 12:30. So are we expecting some bad report this morning that it's thrown into the market before it opens, whereas normally that would be out at 11 a.m. and then midday for the other stuff. So again, an interesting one there. And then it's Thursday. So US unemployment claims expecting another 1.4 million initial job claims again, which is taking us very close to the 60 million I spoke about months ago. As tragic as it is, it's a sign of a failing system, I'm afraid, and also a sign of things to come. Unfortunately, you're not going to see that decrease for some time. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.